Welcome, my friend Beimnet, a BB from Galaxy Digital Trading, as always. How are you doing?
Good. How are you doing?
I'm good. It's good to see you. It's a little bit of a quiet week, I guess. I mean, after last week, certainly in crypto, which was a material uplift in prices, now we're sort of sideways at these levels. Viewers of our YouTube channel, which we are on video. If you only listen on audio, worth checking us out on video. You know, occasionally.
I've always thought I've had a face for podcasts. not.
Viewers will see the block clock next to me, which shows that we're at about 22.6 on Bitcoin. So we're still up where we were, but a little quiet. Anything you're paying attention to in particular this week?
Yeah, a couple of things with respect to crypto. One of the things is CME activity. So we've seen a pretty material jump in open interest on CME, Bitcoin, and I think ETH futures as well. And I think that's a sign of growing sort of institutional adoption. In addition, it's a sign that, you know, folks are still not comfortable with credit risk in the space, right? People want to buy Bitcoin without facing counterparty risk or without having counterparty risk. And obviously the CME is a gold standard.
Yeah.
And so I think the growing importance of CME futures tells you that, this asset class has a place in institutional portfolios. In addition, the guys that have been buying the stuff on CME, they've been paying a premium to spot, right? And so,
that shows demand.
That shows pretty strong demand.
Yeah.
So I think that's been super notable.
Interesting.
I also have been paying attention to gold in traditional markets. It's basically at trend highs, trading around 1935. And I think, that's partially a function of like strong seasonals and like weak dollar, et cetera. But if we're to view Bitcoin as something that's similar to digital gold, I think, that kind of price action in physical gold bodes very well for Bitcoin. And I think if you get a break above 2,000 on gold, there's going to be a lot of folks that are going to be like, oh, shit, I missed this, or is this a big breakout?
Should I be buying gold?
Should I be buying gold? And then the natural question, like, do I buy gold or do I buy digital gold? And so, I definitely think that's a powerful narrative that a lot of folks aren't necessarily paying attention to.
Yeah, you love that Bitcoin gold chart, the cross,
I love that,
too.
that chart.
That
yeah, I mean, if you look at it, it bottomed kind of where you'd expect it to. It's now trading at around a ratio of like 11, and it's got plenty of room to go higher. And so personally, I love being short gold versus long Bitcoin. I think that gives you a really nice risk profile. It looks really good on the chart. And it's got a good story to it.
Yeah, it does. It's an interesting long-term Bitcoin narrative as well.
Yeah, no, absolutely. And then in terms of other things we're paying attention to, I think more than ever, it's really important to be honest about the data that's coming in from the market, right? The market's kind of gotten ahead of itself with respect to like inflation expectations that have come down a lot, bond yields that have moved a lot lower, et cetera. And so I'm very focused on data points that suggest that we're going back the other way in terms of inflation or like activity. So there have been a couple of surprises to the upside recently, not that the market is paying attention, but like the NAHB home builder survey came out a little stronger than expected. We had U.S. services and U.S. manufacturing PMIs coming stronger than expected yesterday. You also had a drop in initial jobless claims. So there's like, in the past week or so, you've had pretty strong.
So these are like potentially inflationary.
Or like, higher for longer suggestive things. And I think fundamentally, like I'm looking at bonds and I'm like, these things are not pricing in inflation risk. It's almost like you took away that inflation risk. And like, guys, like we have one of the tightest labor markets in history.
Right.
Stocks are fine. Consumer sentiment is fine. People are getting raises like crazy. I mean, Walmart raises, fucking Social Security raises that went effect at the start of the year. That was 60 million people that get those cost of living adjustments. And you have China reopening It's not.
Right.
Europe isn't going to go through one of the worst winters or recessions in history. Things are starting to look good there, right? So there's, and God forbid the commodities start ripping again. And so I think the market is totally underappreciating inflation risks. And I think that's a function of, or a huge part of it is just how much cash was created over the past, handful of years. It's like, okay, bond yields are really depressed because we printed like $5 trillion of money. And so maybe like they're not reflecting the true like risks because it needs to find a home, etc. And so there's a lot of like neat, interesting things going on.
Yeah.
And that's kind of what I'm paying attention to on the macro side. On the micro, like more crypto-focused side of things, I mean, you've just had such insane moves in a handful of these alts.
I know.
One in particular that makes no sense to me is Aptos. Right now,
is that even a thing yet?
Nope, not a thing.
It doesn't. Has it launched? I mean,
maybe not. I honestly, I don't know anybody that's an actual user of Aptos. I don't know what wallet like you would need. I think there's only a handful of developers that code in that language.
And whatever coins are in the market right now, it's got to be extremely illiquid if there are any at all.
The float is very limited.
Yeah.
But right now, fully diluted, the thing's worth $17 billion.
Which is just crazy.
And I can't tell you a single person that uses it. It doesn't have a stable coin. There's not that many developers on it.
Yeah.
Like, my question is, has this market not learned its lesson?
Yeah.
Like, what is going on that, we have a token that's appreciated?
That's got to revert. There's got to be a reversion there.
It should revert. But, Milton Friedman has a great saying, the market can stay solvent longer than, the market can stay irrational longer than you can stay solvent. And that's really like what constantly comes to mind in crypto.
Well, irrational markets. I love that.
Absolutely.
Hey, so the Fed comes out next week with their FOMC meeting happens next week, I should say.
Correct.
Right?
With their rate decision.
Yeah. And so along with what you were saying about the market kind of under appreciating the inflation risk, right? I mean, the market's also currently pricing like less than 5% terminal rate here, right?
Yeah,
is that
around
still true?
493 basis points. So terminal rates, you have around 25 basis points priced for this meeting, and a little less than 25 priced for the next.
And what we did 50 last meeting.
Yeah.
So like the market is expecting a further decline of the hike, magnitude.
Pace. Yeah, absolutely.
You think, if you had to guess, I mean, is that going to happen? I mean, don't you think part of what Powell and the Fed governors want is to really tamp this thing down? I've heard some recently hawkish statements from some Fed members, right?
I mean, all the Fed speak has been hawkish.
Yeah, wouldn't an upside surprise here help them with their narrative to get the market like in line here to make sure? Because as you've said multiple times, the worst case scenario is that they slow the magnitude and sort of become a little bit more dovish, and then inflation rears its head again, and they have to like go right back.
Yeah,
that's what happened in the 70s a bunch.
Yeah, I totally agree. I think the Fed this year or over the past year has been very intelligent about how they've used like the meeting to push markets, and so typically, like when you want the greatest bang for your buck, you surprise the market. Right. And so like doing a lot and surprising the market gets you a better impact than like communicating it and doing it gradually. And so the Fed was very effective this year, over the past year, of like over delivering and like being more hawkish. Now at this point though, you've had 3 consecutive inflation prints that have come down. Clearly, like it looks like you've topped out. And some of the manufacturing surveys have really moved a lot lower. So the data backdrop is one that allows the Fed to just kind of do the 25 and communicate probably another 25 down the line, and with potential for more. And that'll kind of leave things as is, right? You're meeting expectations. And so the point is, like, I don't think there's really that much of an incentive for them to like surprise and shock the market, given that the data profile has softened.
Which, so really they're starting to see the data they would want to see.
They are. And they've gotten a lot smarter in the sense that why they missed it was because they weren't why they missed inflation, really taking off was because they weren't using some of the anecdotal data or some of the soft data as heavily, or the high frequency things as heavily. And now, like, they've come out with like a new rent index that they're using. They'll look at like more active data series, and they'll rely more on like soft data and anecdotal data. And so they're a lot more progressive, and they see the writing on the wall, which is rents are starting to cool. Right, like used auto prices have come down, home prices have come down. Like, there's a lot of things that suggest that prices are cooling, and so there's really not a need for them to surprise. I think.
Interesting. All right, our friend Beimnet Abibi from Galaxy Trading.
Pleasure.
Great to see you as always, my friend.